Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, which is the COT data. So what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical structure level. In fact, from here, all this previous move to the downside was created. Again, here, the market tested its zone and rejected it to the downside. And at the moment, the market is testing exactly the same zone. And we could expect a bit more bullish price action to be developed right inside of this zone before then getting a potential rejection to the downside. So what we could expect is a bit more short-term bullish price action before then getting more longer-term bearish continuation. Dropping down on the weekly, what do we see? Now, from a weekly perspective, what we can see here is that the market has just been creating and completing the creation of an ideal uptrend. We can see a series of higher highs and higher lows, which every time had the retest of the previous resistance turn support. Now, why is this an ideal uptrend? Because in an ideal uptrend, you want to see the market create a series of higher highs and higher lows in which every single time the market goes and retests exactly the previous resistance turn support, which is exactly what the market did here. We had the retest of this previous resistance turn support. Again, here, retest of previous resistance turn support. The last time being exactly here, before the creation of all this huge move to the upside. And if you remember, I did make a full breakdown of gold when the market was here, explaining all the reasons for which we could expect this rejection to the upside. And I will link that previous analysis in the description so you can go and check it out for more free education. Now, when you have an impulse and correction, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we had the 0.786 Fibonacci retracement, which is exactly this one here, lining up perfectly with this previous resistance turn support, creating a confluence of support at this area, which we could in fact expect the market to test and then to start to reject to the upside, which is exactly what the market is currently doing. Going down on the daily time frame, what do we have? Now, from a daily perspective, we can see how the market has just created a new impulse to the upside starting from here, followed by this correction, and at the moment the market is printing the continuation to the upside. Now, this is exactly what we expected. In fact, I made a full breakdown of gold after this impulse, explaining all the reasons for which we could expect first this correction and then more bullish continuation, which, by the way, I will link in description. I will link this previous analysis as well in description, so you can go and check it out for more free education. Now, as the market is creating this move to the upside, a key area to be looking at is exactly this high. In fact, this previous high is currently the previous daily resistance, which is currently still acting as resistance. If the market will manage to break above it, we could expect more bullish continuation. However, if we get a break below the zone, at that point, there would be a good probability for the creation of this M pattern, which at that point would become quite interesting because, as we know, after the creation of an M pattern, we could expect a potential rejection to the upside for the completion of the M pattern at the neckline, which is previous support turned resistance. Now, If we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, what we can see is that with the last report, we had a huge increase of the net positioning. We went from having 98k net positions all the way up to having 140k net positions, showing how institutions with the last report added 15.2k longs and closed 26k shorts, so 26,000 shorts closed from an institutional perspective and 15,000 longs getting added. Now, this brings longs to 230k compared to only 90k shorts. So definitely there are way more institutions that are longing gold with respect to the ones that are shorting gold. So this creates strength for this commodity. Therefore, if we don't know if the market will break above this high, but if we do get the break above this high, at that point, this previous daily resistance would become support. And on the retest of this daily resistance turn support, this is where we would have quite interesting price action and structure for a potential rejection to the upside. So this would create a potential longing opportunity away from this previous daily resistance turn support. So if from here the market will start rejecting to the downside, at the moment is a bit too premature to be looking for anything, because we would need to wait for the market to create this M pattern. And at that point, things would become interesting, and I will try to keep you updated. However, if we do get the break above this resistance after the break on the retest of this previous resistance turn support, how we could be approaching a potential rejection to the upside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. If you want to learn more, so what I'm speaking about when I say valid entries and these kind of things, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to get access to the mentorship program completely for free. In it, you will have all my courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that at the moment there is this massive promotion in which you can get completely free access to the mentorship program by following these 3 easy steps. So I really suggest that at least you go and check it out at TransparentFX Trading, and I will see you on it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.